Assalamualaikum and hi everyone. I hope you guys have a good day today. So today we are going to discuss about the difference between Islamic finance and conventional. It is include the value of proportions, structure and operational mechanism of Islamic finance system and a conventional system, and also instruments offered by the different institutions and market in Islamic financial system. So before we're going to start this presentation, let me introduce you myself. My name is Fatin Najah binti Bakari
And my name is Namasura Izzati binti Azam. Okay, for the value propositions of Islamic finance, where it falls within the scope of Islam as ad-din and cannot be beyond it, as the Islamic finance based on the Sharia compliance, where the teachings of the Sharia do not apply to our relationship with Allah, but rather they encompass all aspects of human life, where the economics being no expectations. As a believer, Muslims are obligated to uphold the utmost sincerity, justice, and moral values when dealing with the other human beings. In fact, Islamic economic system is based on these philosophy foundations: Tauhid, Rububiyah, Risalah, Akhirat, Ikhtilaf, Tazkiyah, Kafalah, Adalah, and Falah.
For the conventional financial system, especially in the light of philosophical structure of capitalism built on the doctrine of self-interest, it is not concerned about the moral value and it's said to be the value of natural system. The self-interest doctrine relies heavily on the assumption that human beings are rational decision-making. It is argued that by satisfying individual self-interest on one will, it, in general, contributed to the economic development in society as a whole.
For the second difference is the structure and operational mechanism. In the Islamic finance, while income and pricing remains important, there is also considerations on why a product is launched and the impacts it has on customers. For your information, not all the fees can be charged and not all the features can be used in the Islamic finance. So here is the modus operandi of Mudarabah, because this is most suitable applications in the Islamic finance. In the Mudarabah, the customer places an investment for 1,000 ringgit, for example, and then the customer and the bank mutually agree in the profit sharing ratio. Then, the bank will invest the funds in the Sharia compliant investment activity without any restriction from the customers. And if the investment in the Mudarabah generate profits, the both parties will share the profit based on the predetermined profit ratio. And if the case is lost, the customer shall solely bear the financial loss and the bank shall only be financially liable if the loss is due to its misconduct and negligence.
For the conventional banking structure, the conventional bank is designed to have two main functions, which is collect deposit and give loan. Under the conventional banking, the modus operandi is for shareholder give loan. Bank will receive deposit from the customer and invest the money. At this time, the interests are distributed. Next, the customer will request for loan from bank, and what will bank do? Bank will borrow the money from the interbank fund and lend the money at an interest rate. Customer will pay the principal that they borrow plus interest capital from the bank.
For the last difference is the instruments offered by different institutions and market. So I will explain the instrument offered by Islamic bank, where they offer deposit product based on the qard and mudarabah. So what is the qard actually? Qard is the current account under the contract where the risk of the funds lies with the bank and no added benefits are provided to the client solely based on this facility. Next is mudarabah. Mudarabah, as I explained before, in the structures of Islamic finance, the mudarabah is the type of partnership. If the investments gain profits, it will be shared with the both partners, and if the losses would appear, the investment will solely bear to the capital provider.
Masura already tell you about the instrument of Islamic finance. I assume you now understand what is Islamic finance instrument is all about. Now we move to the instrument in conventional bank. As we know that the conventional bank accept deposit on the basis of loan for all type of deposit account including term loan, savings and current account. Interest rate return are provided for the saving account and term deposit, whereas current account may offer free banking facility. In addition, conventional bank invests in deposit in non-Sharia compliance avenue and subsequently earn non-Sharia compliant returns. That is all from us. Thank you for watching and listening to this video. We hope that you will get some new knowledge about difference between the conventional and Islamic finance. We hope all of you guys will always take care of yourself by wearing your mask and your hand sanitizers to fight this COVID virus. Thank you and Assalamualaikum.